Before you invest in a cryptocurrency, it's important that you know what its market cap is. So in this video, I'm going to explain exactly what a market cap is. Then I'm going to show you how to calculate it. And then I'm going to speak about the four main types of market caps. And then to end, I'm going to talk about why market cap is more important than the price of a token. So part one, what is market cap or market capitalization? Is basically a metric that allows us to measure the value of a cryptocurrency. It's used by fundamental analysts, and fundamental analysts usually look at news and all these different things, but they use this concept of market cap to be able to look at what is the value of this token and what is the potential growth for this particular project. So let's talk about how to calculate. So market capitalization is equal to a coin's price times the total supply or the number of circulating tokens. So let's give you an example. Or let's use a YouTube coin, and let's say that the price is $10, and let's say the total supply is $1 million. So market cap equals $10 times $1 million. So the market cap for this particular YouTube coin would be $10 million. So let's talk about the four main types of market caps. So the first one we're going to talk about is the large cap. So large cap is anything with a market cap above $10 billion. So these are usually your safest investments because there's a lot of money involved in these coins. So the chances of it going all the way down to zero are a lot less than one coin that has maybe $1 million in market cap, because all it takes is $1 million to get taken out of that coin and it's gone. Whereas with a large cap, you need $10 billion to come out of that coin for you to go to zero. So let's talk about some examples of large cap cryptos. Bitcoin, Ethereum, and Cardano. These are cryptos which have a market cap greater than $10 billion. Then we've got our mid cap. Mid cap is anything that's between a market cap of 1 billion but less than 10 billion. So obviously, as we go down this hierarchy of market caps, the lower the market cap, the more volatile it is and the more risky it is. So these are like in the middle range. They're not too risky, but they are more risky than the large caps. Then we move on to number 3, which is the small caps. So these are anything between 100 million but less than $1 billion. These are way riskier than mid caps and incredibly risky compared to large caps. And they're obviously more volatile, which means that the price can fluctuate massively. Now finally, the micro caps, which are usually market caps with less than 100 million. Now these are the type of coins that early investors would get into because they offer the greatest risk to reward potential. Obviously they're very risky because if they're less than 100 million, let's say maybe it's a 50 million market cap, that means only $50 million has to disappear from that coin and we're going to go to zero. Just like how we compared the other ones, it takes a lot more money to leave that coin for you to end up at zero. With these micro caps, it doesn't take that much and they go to zero. But also, because it doesn't take much for them to go to zero, it also doesn't take much for them to increase massively in value, right? So if you've got a coin that has a $50 million market cap, if someone goes and injects 50 million into that token, it's going to massively increase the price and your risk to reward potential, right? But if you went and put 50 million into Bitcoin, it's not going to really do that much to the overall risk to reward potential of Bitcoin per se. So what you got to be careful with these micro caps is there's these people called whales, which are basically really rich people who have a lot of money. They can basically put a whole influx of money into this coin and it can go crazy. So for example, if Elon Musk went and put $5 billion in one of these very, very small market cap cryptos, the price is going to skyrocket. Whereas if Elon Musk put 5 billion into Bitcoin compared to the other one, Bitcoin might move up, but it won't move up as much as if he put it into something with an incredibly low market cap. Now, what's important is when you are looking to invest in cryptocurrencies, you have to look at the market cap, because by looking at the market cap, it gives you sort of an idea of how far it can move upwards or downwards and how risky it is. That's why I've explained these different market cap categorizations, because what I want you to do is look at all these different market caps, and then you can create your own diversified portfolio with maybe a couple of large caps, a few mid caps, And then if you really want, and you're feeling like going to the casino, but you want to make, potential to make a lot of money, look at some micro caps and see which ones you believe in. If you are right, you can make a lot of money. Now, this is not financial advice, but obviously if you're looking to make a lot of money, quickly, then you'd be looking at those micro caps because the risk to reward potential is a lot higher. So part 4, why is the market cap more important than the price? Well, the market cap is more important than the price because if you look at something and it's maybe $5 versus something that's only 10 cents, right? You automatically think that the one that's worth $5 is more valuable than the one that's 10 cents. But when it comes to crypto, that's very different. And that's why market cap is very important, which I'm going to show you a bit later, an example to just illustrate it. So really the only time that price is really important is to actually calculate the market cap. A lot of people who are newbies and they don't know, they look at something and they say, oh, this coin is worth $30, so it's obviously a really good investment because it's gone all the way to $30, and I don't want to buy this one that's only 10 cents because it's so cheap, so it's obviously not valuable, right? An example of a coin with a very high market cap but very low price is the famous Dogecoin, right? So Dogecoin is worth a couple of cents, but its market cap is incredibly huge. So when you look at the price of Dogecoin, you're thinking, it's really cheap. But then when you look at the market cap, it's so huge. I'm not telling you to invest in Dogecoin. I don't really believe in Dogecoin. It's a meme coin, but I'm just using that as an example. To just illustrate this concept a little bit further, let's give you an example, right? So let's give you 2 coins. So let's call it coin A and coin B. Let's say coin A has a price of $10 and let's say coin B has a price of $1. So let's say that coin A only has 1,000 tokens. So coin A's market cap is $10 times 1,000 tokens. So coin A's market cap is $10,000. Now let's say coin B, even though its price is only $1, let's say that it has 10 million tokens, okay? So now coin B's market cap is going to be $1 times a million. So now coin B's market cap is now $1 million. So now look at the 2 coins, right? Coin A market cap is only $10,000. Coin B market cap is $1 million. So if you just looked quickly and you looked at the price, you would think coin A is more valuable than coin B, right? You would think, oh, let me invest in coin A. It seems like it's a bit more reliable. Let me invest in this one. I'm not going to invest in this one. But you see, the problem is you think that coin A is less risky than coin B. But in fact, coin B is less risky because if you look at the market cap, it's a lot bigger than the $10,000. There's a very high chance that that's probably a scam coin that someone's just created, put $10,000 into, and then they're like, let's see who's going to buy it. As crypto got really popular, what ended up happening was there were some people who would just create silly tokens and then they would just hope that someone would buy them. And there were lots of times when people were actually just buying these crazy coins and next minute they had crazy market caps of millions of dollars, sometimes even billions of dollars. And then what these people would do, thank you very much, and then they'd rug pull. Now what a rug pull is basically where they take their coin, take the money, and you are left with nothing. And that's why market cap is important. And in order to calculate market cap, you need your price and you need your circulating supply. And if you don't understand what circulating supply is, I have a video you can watch, which is right over there.